Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we'll be discussing what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. We'll also be discussing on the key sectors and stocks that we should be focusing for the day and the next few trading sessions. In trade yesterday, the benchmark index Nifty witnessed high volatility as it oscillated in a range of 200 points while finally ending the session on a flat note. On a daily scale, it has formed a long-legged doji candlestick pattern. This clearly indicates indecisiveness at higher levels. Among the sectorial indices, if we see Nifty IT and Nifty Financial Services were the top gainers, while Nifty Realty, Nifty PSU Bank and Nifty were the top losers. The advanced decline ratio were largely tilted in favor of the decliners in trade yesterday. Most noteworthy Nifty Midcap and Nifty Small Cap indices have dipped by 1.41 and 2% respectively in trade yesterday. Currently, if we see from the all-time high, Nifty is down just about 1%, while at the same time Nifty Small Cap is down by nearly 10%, while Nifty Mid Cap is down by nearly 4% from its all-time high. This clearly shows bearish sentiment in mid and small cap counters. Hence, we suggest avoiding mid and small cap space for the current time being. From a global market perspective, if you see in yesterday's trading session, all the three US indices ended on a positive note. This is despite the fact that the US CPI numbers have come slightly higher than the expected lines. Even there was little reaction on the dollar index, which after a brief up move to the resistance zone of 103.20 has once again cooled off below 103 levels. The S&P 500 has given the highest closing ever as it surged by over 1% in trade yesterday. Going ahead, the index is likely to continue its northward journey and test the levels of 5,260 followed by 5,340 in the short term. While on the downside, the zone of 5,120-5,100 is likely to provide cushion in case of any immediate decline. Despite the Nifty ending on a flat note, the volatility index VIX has dipped by 2.5% to close at 13.64 after trading in a narrow range of 14.19 and 13.57 on Tuesday. Going ahead for India, VIX 13.4 levels will act as crucial support, while 14.75 will need to be closely watched on the upside. Coming to Nifty, the 10-20 EMA zone, that is the levels of 22,200, 22,300 will act as a crucial support zone, while the resistance of 22,410 needs to be crossed and sustained for a fresh leg on the upside towards 22,550, 22,600 mark. If we look at the OI data for Nifty futures witnessed an addition of nearly 3.29%. While the open interest, that is the open interest part, while the 0.11 rise in price, implying a long built up in the indices despite the high volatility. For the current weekly series, Nifty PCR is currently at 0.75 and the max pain is at 22,400 strike. Meaning call writing was witnessed in 22,400 and 22,500 strikes, while on the put side it is mainly seen in 22,300 and 22,200 strikes, implying the range for the coming few sessions could be 22,200 on the downside and 22,500 on the upside. Coming to Bank Nifty, the banking index, that is the Bank Nifty, has witnessed high volatility in Tuesday's trading session as it has traded in a range of nearly 928 points, which was the highest daily range in the last 7 trading sessions. On the daily scale, if we see, it has formed a high wave candlestick pattern which shows indecisiveness. 20-day EMA zone, that is the levels of 46,900 did act as a support, and we expect 46,900, 47,000 to continue acting as a strong support going forward. Till 46,900 holds, the sentiment could be buy on dips, and gradually Bank Nifty could inch up higher up to 47,700, 47,800 mark on the upside. A sustainable move above 47,800 could lead to the index moving towards 48,100, 48,200 levels. While on the downside, a breach of 46,900 could lead to further profit booking up to 46,500, 46,300 zone. From the open interest perspective, that is for Bank Nifty cumulative OI surged by 5.15 while price action remained relatively flat. On the options front, Bank Nifty PCR is at 0.66 levels. Significant call writing is seen in 47,500, 47,800 strikes, and on the put side it is majorly seen in 47,200, 47,000 strikes, implying a range of 47,800 on the upside and 46,900 on the downside for the coming few sessions. Stocks and sectors in momentum. On Tuesday's trading session, majority of the sectorial indices witnessed profit booking. However, some of the IT stocks have outperformed frontline indices, especially if you see the IT space. TCS and Intellect Design look good on the charts. The IT bellwether TCS has given a following channel breakout and strongly outperformed the frontline indices. Apart from this, Quick Heal, Linde India, Poonawalla FinCorp and Phoenix Limited are looking good based on technical and relative strength charts. Coming to the FII DI data, in the cash market, that is, both FIIs and DIs were net buyers in trade yesterday to the tune of 73 crores and 2,358 crores respectively. FI long short ratio for index futures is at 42.86 on a net basis, this as they bought 4,654 index futures. On the stock futures front, FIs have bought to the tune of 33,330 contracts, while on the options front, FIs bought 23,800 call contracts and sold 23,917 put option contracts. So friends, that's all for today. Thank you for regularly listening to our podcast and wishing you all an energetic day ahead. Do tune in tomorrow for more market updates and insights. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.